MercadoLibre stock just crashed nearly 13% after reporting what many investors believed was a surprisingly strong earnings quarter. Welcome back. Today we're breaking down MercadoLibre's earnings report, the bullish thesis, the growing risks, and why the stock sold off so aggressively. Revenue surged 49% year-over-year to $4.8 billion, marking the company's fastest growth pace in nearly 4 years. Total payment volume jumped 50%, while gross merchandise volume climbed 42%, showing massive ecosystem expansion across Latin America. But despite the explosive growth, investors became concerned as operating margins continued falling due to aggressive long-term investment spending. So the big question becomes simple. Why would investors sell the stock after such powerful growth across nearly every major business segment? The answer is that MercadoLibre intentionally sacrificed short-term profitability in order to aggressively accelerate long-term business expansion. Management believes Latin America remains massively underpenetrated digitally, creating what they describe as a once-in-a-generation opportunity. Brazil, the company's largest market, actually accelerated growth further this quarter despite already operating at enormous scale. Management made it very clear that maximizing short-term margins is not their priority while this growth opportunity still exists. MercadoLibre believes Latin America remains in the very early stages of digital commerce and financial transformation compared to the United States. In countries like Mexico and Argentina, millions of consumers still rely heavily on cash and informal financial systems every single day. That creates enormous runway for Mercado Pago to expand digital payments, lending, banking services, and financial accessibility across the region. The company's strategy is centered around building an ecosystem where commerce and fintech continuously strengthen one another over time. This flywheel drives long-term growth. And according to management, the company is seeing stronger user engagement, rising market share, and accelerating growth across nearly every major category. One of MercadoLibre's biggest strategic focuses right now is aggressively expanding its credit card ecosystem across Latin America. Management believes the credit card acts as a powerful gateway that pulls millions of commerce users deeper into the fintech ecosystem. This drives MercadoLibre's long-term growth. The company issued roughly 2.7 million cards while growing its credit portfolio more than 100% year-over-year. Even more impressive, non-performing loans actually improved while the company aggressively expanded lending into newer customer segments. MercadoLibre's deep transaction data allows its underwriting models to make increasingly intelligent and highly targeted lending decisions. But this aggressive lending expansion also created one of the market's biggest concerns surrounding MercadoLibre's long-term risk profile. The company's net interest margin after losses declined significantly, raising fears that lending profitability could weaken over time. Management openly admitted that the company is intentionally expanding into riskier lending segments to accelerate future growth. Normally, when lenders aggressively expand credit into riskier markets, loan quality eventually begins deteriorating across the portfolio. And this is exactly where many investors started questioning whether MercadoLibre's growth strategy may eventually become too aggressive. Management pushed back strongly against the bearish narrative and argued that the underlying health of the portfolio is actually improving. Despite expanding aggressively into newer customer segments, non-performing loans actually declined on a year-over-year basis. The company believes its underwriting models are becoming smarter as more users interact daily across the broader ecosystem. In some markets like Argentina, traditional banks are seeing worsening loan quality while MercadoLibre's portfolio remains relatively stable. Management also emphasized that short loan durations allow the company to react quickly if economic conditions suddenly weaken. One of the strongest and most overlooked parts of MercadoLibre's business right now is its rapidly expanding advertising division. Advertising revenue surged more than 70% in US dollar terms, while significantly outperforming the broader digital advertising market. This suggests advertisers are increasingly seeing stronger returns on ad spending inside MercadoLibre's growing ecosystem. The company's enormous customer data advantage allows advertisers to target users with remarkable precision across both commerce and fintech. As more users shop, borrow, pay, and advertise across the platform, the entire ecosystem becomes increasingly powerful and interconnected. Management repeatedly emphasized that short-term margin compression is a deliberate decision designed to maximize long-term competitive strength. The company claims it could rapidly increase profitability tomorrow simply by slowing down investment spending across the business. But management believes slowing investments right now would risk losing one of the largest growth opportunities in Latin America. Executives believe Latin America's digital economy still has decades of runway remaining before reaching full maturity. And this is ultimately where the debate around MercadoLibre becomes a battle between short-term fear and long-term conviction. Despite concerns around margins, MercadoLibre's top-line growth continues to accelerate at a scale rarely seen in mature public companies. And every major business segment, from commerce to fintech to advertising, is contributing to this broad-based acceleration. Despite the stock's reaction, this diversified growth engine is driving MercadoLibre's success. The company continues to strengthen its market leadership position across Brazil, Mexico, and other key Latin American markets. Even in a highly competitive environment, MercadoLibre continues to expand its share while competitors remain fragmented. This combination of scale, data, and ecosystem integration is what continues to widen MercadoLibre's long-term competitive moat. However, despite all the bullish momentum, there are still important risks that investors cannot ignore. One of the biggest concerns is continued margin compression as the company aggressively reinvests into growth. Another key risk is credit expansion into higher-risk customer segments across Latin America. This exposure could pressure MercadoLibre's financials despite strong earnings. Macroeconomic volatility in Latin America could also impact consumer spending and loan performance over time. Finally, valuation remains a debated topic as the stock continues trading at elevated multiples compared to historical averages. Stepping back, MercadoLibre is no longer just an e-commerce company, it is an entire digital ecosystem. Its ecosystem of payments, logistics, and data creates a powerful flywheel for sustainable growth. The scale of its revenue growth over the past 5 years has already redefined what compounding looks like in emerging markets. And the digital transformation of Latin America is still in its early innings. MercadoLibre stock is crashing nearly 13%, but this is a market overreaction. Their fundamentals are strong, and the region is booming. Fintech and credit expansion continue to unlock entirely new revenue streams across underserved markets. This is driving growth, despite the market's overreaction to earnings. MercadoLibre remains a strong long-term play. As scale increases, the company's data advantage and logistics network become increasingly difficult to replicate. This widening moat is why MercadoLibre dominates its markets. This creates a clear divide between short-term uncertainty and long-term conviction. Bearish traders are selling off while long-term investors are accumulating. While valuation remains debated, long-term investors focus on compounding cash flow potential rather than short-term multiples. Let's look at the DCF. Short-term risks exist, but they are increasingly overshadowed by the scale of the long-term opportunity. As you can see, the growth charts are now dominating the frame, highlighting the true potential ahead. If execution continues, MercadoLibre has the potential to become one of Latin America's first trillion-dollar companies. If you found this analysis valuable, make sure to like, share, and subscribe. I'll see you in the next video. Until then, take care.